I think the focus right now is what the PBOC does next to help the situation in China, whether it's in the property sector, whether it's with the power crunch. And you're saying that there's a high probability of a universal RRR cut in the coming months. What else and how much can really policy help in this situation?
Yes, I do think at the margin there will be some modest easing in monetary policy, as you suggested. But I do not think that China is going to loosen monetary policy dramatically or fiscal support either. Let's not forget that even though Chinese growth is decelerating, it is above trend. Remember, in the first quarter of this year, GDP expanded by some 18%. So inevitably, mathematically, there is a sharp deceleration in growth, but it is above trend. And I do think that provides the authorities with the flexibility to potentially stress test the economy, particularly relating to the property sector. So it's absolutely the case right now that the market and the authorities are focused on heavily indebted property companies, seeking to carefully protect vulnerable sections of society, particularly those individuals that actually purchase and put down their deposit on these kind of off-plan designs. And I think that difficult balancing act is going to remain critical right now. So let me just finish by saying, on one side, there's absolutely the focus on moral hazard and an unwillingness to bail out or in any way meaningfully support these leveraged companies. But at the same time, they don't want to prompt a financial crisis either.
Yeah, and it's a tricky one, actually, to tread this balancing act that you're talking about. John, what about inflation? Because as per your notes, you believe inflation could decelerate and that it's already peaked. And that's quite a bit in contradiction to what a lot of the big voices are saying out there about how inflation risk is rising and can be quite an important one come 2022.
No, actually, our review for inflation is clearly data dependent. And the supply chain disruption, which we are seeing in many parts of the world right now, is clearly ensuring or impacting inflation outlook, dragging out or drawing out that so-called transitory or temporary thesis. Until we see that those supply chain disruptions normalize and repair, then of course price pressures are going to remain elevated. But I do make the point that we think that there will be a repair of supply chains. I don't think it's structural. I don't think it's permanent. I do think into next year we will start to see inflationary pressures moderate. And I think the market does as well. If you look at the performance of the 10-year, you can see actually yields ticking a little higher. And I think that's broadly consistent with a reflating economy and this idea that actually eventually price pressures also will moderate.